In 7 clicks, can I identify Qullamaggie style 5-star setups that have high ADR percentages and also impressive relative strength rankings? Here we go. I'm just going to count the clicks. Click number 1, click number 2, click number 3, click number 4, click number 5, click number 6, and then finally click number 7. So this is then going to display results of stocks that have very high average daily range percentages, impressive relative strength, and we're looking for the stock to have made a big move, pulling into moving averages, and then starting to build some form of flag type pattern and variations of that. So here you go, side by side right here. The moving average is the 21 SMA. So we can see the stock is pulled in, starting to bounce. If I want to put this in a watch list, I just click here, then I can put it into various watch lists, ping that straight into TC2000, TradingView, whatever is your preferred trading platform. ALT, stocks made a huge move here. Okay, this is maybe one that I want to be watching. Ping it into a watch list just like that. I've got PLSE. Okay, stocks made a big move here, about $3.50 up to $10, building. Could be some form of flag Darvis box there. Same with CleanSpark here. Okay, the stock's made a nice move here. Look at the volume coming through as well, starting to base. Okay, these are ones that I want to be having in my watch list. How to quickly scan for Qullamaggie high average daily range percentage setups with relative strength. So I was just taking you through there how quickly and easy it is to scan for these type of setups using my custom built stock screener. What I'm going to do in the rest of this video is explain to you and teach you what is a perfect setup, why does a high ADR percentage matter so much, and what is the importance of relative strength. MarketSmith are today's video sponsor. There is a discounted trial available in the comments below if you are interested. Okay, this video is going to be split into 4 main parts, and we've already done part number 1, okay? How to quickly scan for 5-star setups. So I was just showing you how to do that on my custom stock screener. However, you may not know what is a 5-star setup. What does it look like? What's the importance of a high 20-day average daily range percentage? Why does relative strength matter? Don't worry, next 3 parts of the video are going to explain it. So we're going to do setup pattern recognition. I'm going to explain why high ADR percentage matters and why relative strength matters. Let's just get straight into some charts. So we're going to be going through some charts in chronological order, pretty much from 1980 up to the present day, so I can illustrate these points. So here we go, we've got Foot Locker on the top, and lined up below we've got the S&P 500. Now there's 4 breakout setups on this chart. Each of them I think are pretty good. Some are a little bit better than the others, and if you don't know why these are good breakout setups, hopefully by the end of the video you will. So we take a look at Foot Locker here. Okay, it's in a nice uptrend. There's some blue dots down here. What does this mean? This is the relative strength line, not the RSI, relative strength line. It's a free tool. Search my name in TradingView, you'll find it. I like stocks with these blue dots. 52-week highs in this instance here versus the S&P 500. It's configurable. You can change it in the settings if you're trading stocks, say in different indexes. But you can see we've lined these up like this. Let's just talk about breakout number 1, okay? You've been watching a couple of YouTube videos and you're like, wow, I heard the Darvis boxes, flags, ascending triangles, pennants, wedges, they're really good to trade, right? I want a stock with relative strength. I want a stock with volume. And you can see it sets up here perfectly. Like perfectly, but before it closes below its 21-day EMA, it only goes up 13%, and the S&P 500 in that period goes up about 7.5%. And you're kind of thinking, well, when I buy a flag, when I buy a pennant, a wedge, isn't it supposed to go up 50%, 100%, 150, 250? Why did this stock only go up 13%? And then over here it happens again, right? It sets up really nicely, gets really tight on the 50, the volume dries out, before it closes below its 21 day, it goes up 13.5%. Okay, not bad, but here the S&P in the same time's gone up 9.5%. Why is the stock pretty much in both cases only gone up 4% more than the indexes in the same time period? It's all to do with the character of the stock and the average daily range percentage. This is why we want to look for stocks with high ADR percentages on a 20-day basis. So this is all going to start making sense. So here's NVIDIA. I bought NVIDIA early this year on this bar here as it was coming through. Let me go and get my laser pointer. There we go. Okay, on this day here. Now, NVIDIA's 20-day ADR percentage at this point here, where I call this a trigger bar. So those of you who watch the channel will know trigger bars, gap down, reverse bars, shake out demandos. Okay, so it's putting in this trigger bar sitting on the 10-21-day EMA. Okay, the key is down here. You can see the 52-week highs, NVIDIA, huge earnings, huge sales. I'm going to talk about fundamentals in the final slide of this presentation. They are important as much as you may not want to think they're important, and fundamentals are important. Obviously, heavily involved in AI as well. So the ADR percentage, it's not massive. Now, we'll get on to what is massive a little bit later on in the video. It's 2.84% relative to the NASDAQ 100, which is a pretty applicable index if you ask me. The 20-day ADR percentage of the NASDAQ was 1.19%. So NVIDIA is twice that of the applicable index, being the NASDAQ 100. Now, why is that important? Here's the hypothesis. Here's the reasoning behind it. If the NASDAQ goes up 10%, so let's say the NASDAQ's The Nasdaq's 20-day ADR percentage is 1%, okay? And the stock's 20-day ADR percentage is 2%, so it's twice that of the applicable index. Well, if the index goes up 10%, it's reasonable to expect and conclude the stock could go up twice that of the index. So if the index goes up 10%, the stock could go up 20%. If the ADR, 20-day ADR percentage is, say, 3 times or 4 times that of the index, the stock in that instance there could go up 30-40% if the index goes up 10%. Makes sense? But it doesn't tend to be linear in nature, it tends to be exponential in nature. So at this point here, Nvidia's first close below the 21-day EMA, 56%, whereas the Nasdaq 100 goes up 15%. What do you want to be involved in, Nvidia or the index? Here's one, this is a firm, this is a little bit more recent now. I was targeting it through here, cup and handle type pattern, nice high ADR of 7.42%. I boosted this one up because it gapped up slightly, I cancelled it. I shouldn't have done that. Okay, that was a mistake on my part for cancelling it, but anyway, the principle remains the same. On this day here, okay, when you get the shakeout demand out off the 10-day EMA, inside bar coming through, 52-week highs are there. The 20-day average daily range percentage of a firm is 7.42. Okay, the index is not even 1%. The SPY's is 0.93. So remember what we were just saying there, okay, in terms of a firm is basically, it's over 7 times, 8 times quicker than the index. So if the index could go up 10%, it's reasonable to expect this stock here could go up 70 or 80%. And again, remember, it doesn't tend to be linear in nature, it tends to be exponential in nature. So a firm is currently up 76%, while the SPY's is up around about 3.5%. This is the importance of ADR, focusing on high average daily range percentage stocks. I was just showing you in the screen here, and you can configure that. You can change it, do all sorts of weird and wonderful things with it to dial it in and focus on the type of stocks you want to focus on. But this is the power of ADR percentages, high ADR percentages. Okay, their moves can be absolutely leveraged to that of the indexes. So let's play this forward. So now what I'm going to do, I got a couple of quotes from Qullamaggie, and I got a couple of charts as well, just to dial it in and start helping you with your pattern recognition, because there's no point you screening for stocks if you don't know what you're screening for. You've got to know what does a high quality setup look like before you even start screening for it. Okay, otherwise you've got keys to a car, but you don't know how to drive the car. You need to know how to drive the car. Okay, so here we go. This is a 7-star setup on a 5-star scale. What does that mean? Okay, it means it's absolutely ridiculous. It's one of the best setups you will ever see. If you don't know why this is a fantastic setup, okay, you are going to know by the end of this video, hopefully. Look at the stock. Look at the move that the stock has made, staying above the 10-day EMA. So the character of the stock, I want to add this in, the character of the stock is so important. You do not want a stock that goes from A to B and chops around all over the place. There's no point. There's no point, because from a trade management standpoint, it's going to be awful. So this stock here, it goes from $2 to about $9.50, and it doesn't want to close below its 10-day EMA. You don't want a stock that's doing this, chopping around all over the place, because in your trade management, you're probably going to be riding one or more key moving averages. So if the character of the stock is such that it just chops around all over the place, it's going to be a nightmare to manage. So we want to see pre-base, nice smooth trends to the upside like that. Then in the base, what are we looking for? Well, we're looking for a stock that respects its key moving averages. Preferably it holds either the 10-day or the 21-day. If it's a much bigger base, maybe the 50 is going to be there, which is the purple line on my charts. But you see how it bounces off the 10, bounces off the 10, shake out demand tail to the 21, and then tight, the volume dries up. So big move, goes sideways, builds a tight range. Look how tight it gets, breaks out, and boom, memorize this. So that is the setup there. Okay, this is what happened afterwards. So this is why I'm doing the charts like this. So you can pause the video, you can dial it in, and just, it's pattern recognition. Like, so much of trading is being patient. Like 99.9% of trading, you're not actually trading. You are just sitting patiently waiting for the stock to get in a viable position as per your criteria. But you got to know, what am I looking for? What is the pattern recognition? So it's about having these kind of stocks on your radar and then just waiting for them to set up as per your criteria. Hopefully you have criteria. So this one right here, quote, perfect breakout right here. 6-star setup on a 5-star scale. What does that mean? It means it's a ridiculously good setup. It's off the scale. It's crazy good. It's really good. Plus the ADR percentage of this stock here was like 12.5%, I think. I think you're going to see this one a little bit later when we get into some of the 2020 ones, okay? So positive earnings reaction, okay? Huge move up here, pulls in. What moving averages is the stock holding? 10-day here, 21 here, 21 here, 21 here. Tight low volume inside bar. I call these trigger bars, okay? That's before, this is after. Then the stock goes up 226% before it closes below its 10-day EMA. Do not mess those ones up. So remember that I was talking about with PR2S. The move pre-base is really important. We don't want stocks that chop around all over the place. We want smooth movers. Why? From a trade management standpoint, going to be so much easier. AMD, I think I've got 5 perfect setups. So this one here, this is a 6-star setup on a 5-star scale. You've got to memorize this. You don't get many of these. Look how tight it is. Bounces perfectly off the 20-day, which is the blue line, but I use the 21-day EMA, then gets really tight. So those of you who have watched channel for a little while will recognize this bar and go, in the middle of the base, gap down, reversal bar. Gap down, reverse bar. The prior close here, gaps down, opens here, pushes up, and then starts tightening around the 10-day EMA. Inside bar, look how the volume dries up. Interesting. Go back to Novavax 1021. Inside bar, volume dries up. Interesting. What does that mean? There is sweet FA in terms of supply coming through. This is a very good setup, especially if it's showing a lot of relative strength and has a high 20-day average daily range percentage. So that's the setup there. That's what happens afterwards. This one here, Kodaks, or Kodaks. I was trying to, Kodaks, I was thinking about the camera company. CODX is the ticker of this one. Here we go. This is a 6-star setup on a 5-star scale. This is a quote from Qullamaggie. Makes a big move, it gets tighter and tighter. Builds high lows, goes from surfing the 10-day moving average to surfing the 20-day moving average. So see here how it's surfing the 10-day. I use EMAs on my charts. So here, this is the 10-day. Okay, see how it's surfing the 10-day, and then the 21 catches up and it starts bouncing off the 21. Has a range that gets tighter and tighter, has a really narrow range day before the breakout. Inside bar, low volume, sitting around what moving average? Interesting, right? This is the repeatable nature. This is the deliberate practice point of studying stocks like this. It breaks out on higher volume. That's the perfect setup. So when you're doing your scanning, what do you think you're looking for? Makes sense? Kodaks, here you go. Now this stock here goes up 588% in 5 sessions. I'm not saying you're going to top ticket, but by the end of the session, Kodaks here, I am actually going to show you this one and show you the ADR percentage of this stock here, and then it will start making sense. Like, why is this stock able to go up 588% in 5 sessions, whereas an Apple and Amazon and Microsoft has no chance? It's to do with the character of stock. It's to do with the ADR percentage. So moves like this are not going to happen in a stock that has an ADR percentage of 2%. It's not. It's just not going to happen. Like it may happen, but there is a minute possibility. They are much likely going to have high ADR percentages. Celsius here. This is the final perfect setup. Then we'll get into a couple of my. So makes a big move, surfs on the 10 and 21, 10 and 20 moving averages, start building higher lows off the 20-day, takes out this tight range. This is a nice 5-star high tight flag. So see how it's trending up here. Note that the stock is not, it's not chopping. Look at my cursor, okay? Look at this. It's not doing that. It's not chopping around all over the place. It's just trending nicely above the moving averages. Bounce off the 10, holds around the 20, holds around the 20, nearly back to back. Well, it is back to back inside bars, and look how the volume dries up, and there's a 52-week high in the base. See this on the relative strength line. This is subtle, but it's so important. There's a 52-week high on the relative strength line. Free tool in TradingView. Search my name, you will find it. So RS 52-week high in the base signals what? Extreme strength. So not every setup is created equal. What do we want? We want leading stocks of the day. Ideally, they have triple-digit earnings, triple-digit sales, massive estimates, involved in new areas of kind of growth and innovation like artificial intelligence. Then they're building flags, wedges, pennants, ascending triangles, all of that good stuff, okay? They're hitting 52-week highs. They have really high ADR percentages relative to the major indexes. Ideally, 2 times, well, more than 2 times, 3 times, 4 times, 5 times, 6 times that of the major indexes. If you keep in your head that the major indexes, if you combine the SPYs and the Qs, the average is around about a percent and a quarter. If you keep that figure in your head, so for me, I'm looking for stocks that ideally have minimum ADR percentages of 3-4%. The real juicy ones are more likely to have kind of 5, 6, 8, potentially 10% and greater. Obviously, the higher the ADR percentage, the kind of rarer it gets. So let's go through a couple, okay? When I say a couple, how many have I got for you? I don't know, around about 40 or so, okay? So what I'm going to do is I'm going to take you on a little journey here. So by the end of this video, I really want you to get a couple of things from this, okay? I really want you to understand what is a ridiculously good setup. Now, I'm primarily here in the next kind of 40 slides or so, but I'm going to take you through setups from the 1980s to the present day. I'm mainly going to focus on flags, variations of flags, ascending triangles and stuff like that, okay? I'm not going to go kind of like, here's a cup and handle, here's a VCP, here's a pan. Most of them are going to be flags, ascending triangles, pennants, okay? Pretty much Davis boxes as well, okay? So let's start here. This is KEX, ticker KEX, Kirby Corporation, in 1981, and we've got it loaded up or lined up above the Dow Jones Industrial Average. So this stock here, okay, before it closes below its 21-day, goes up 42%. The Dow Jones during that time goes up 4%. Okay, interesting. What was this stock doing? So let's just talk about relative strength, okay, because it's a term, it gets kind of thrown around. Oh, relative, stock's got relative, most people don't even know what it means, okay? This is what relative strength means. So you can see here, the relative strength line is in a nice uptrend. It's hitting 52-week highs. That's really, really, really good. But let's now take a look at the price action. So this is the price action of the stock relative to the price action of the major indexes. And we're just going to use the Dow Jones for this purpose here, okay? Back in the 1980s. So here we go. Kirby Corporation, see this uptrend here. Look at this time from, this will be January 19th to like 1st of December. Look at this period in time here. What is the stock doing? It's trending above all key moving averages really nicely on volume, hitting 52-week highs in the latter part of that trend. What is the applicable major index doing? It's in a downtrend. It's doing the opposite. It's basically below all key moving averages other than the 200-day, making lower low, lower high, lower low. This is relative strength. The index is making lower lows and lower highs while the stock is trending up. The stock here is saying, I'm a really, really strong stock. If you know what you're looking for, you know this is a really strong stock. And then what are we looking for? This is a really nice rally pre-base. Remember, it's not chopping around all over the place and it's showing ridiculous relative strength. Then we're looking for a base. Now, for the purpose of this video, most of them are going to be variations of flags, okay? So what does it build? It builds a flag with low volatility holding above the 10-day, volume dries up, 52-week highs in the base. Remember when I was just shouting at you a couple of minutes ago, I think it was on the Celsius chart, where Celsius hits a 52-week high in the base, and I was like, it's an extreme sign of relative strength, okay? KEX, ticker KEX, is doing this in 90, it's a timeless principle. Relative strength is timeless. High ADR percentages is timeless. These repeatable chart patterns are timeless, as you're going to find out. And then for me, where I'm like stopping this on 95% of these are going to be trigger bars around one or more key moving averages. If you don't know what trigger bars are, go and watch the blueprint video on the channel. Now, the 20-day ADR percentage of KEX here is 3.81%. Relative to the index, it's about twice that. So it's reasonable to conclude that, well, if the Dow Jones goes up 10%, this stock here could go up 20%. But again, when you have a stock that has a high ADR percentage in displaying fantastic relative strength, it can go up much more than that. Okay, it's not necessarily linear. It's just a way to kind of think about it and why high ADR is important. Now we go to HOV. This is in the 1986. So here we have the Dow Jones. Now the 20-day average daily range percentage of the Dow Jones is 1.31%. With HOV, the 20-day ADR percentage is 4.8%. Now, I'm not saying you would have top ticked this, but in 13 sessions, the stock has gone up 62%. The Dow Jones has gone up 3.65%. Look at the relative strength. Look at the trend pre-base. Look how it's set up. It's really, really, I cannot stress this enough, okay? Do things on a really specific basis. Get so specific, you're like nerding out on it. Right? You have to go, you don't want to go horizontal in terms of like your knowledge and your skill. You want to go vertical. You really, really want to study the stocks in such a deliberate manner to go, okay, how on earth did this stock and 100 stocks and 1,000 stocks go from point A to point B? What are the things I'm noticing? How do they set up before they break out of the base? What do they tend to do in the base? What do they do pre-base? What do you see here? Nice rally, not chopping around all over the place. 52-week highs again. Good volume coming through. Tightness in price in the base. Low volume. What does tightness in price and low volume tell you? It tells you there's not much supply. There's not much selling pressure. Then look at the tightness that happened before the breakout. This links back to the, well, it's a timeless principle, but one that Toby Crabell talks about as well, of contraction and expansion. Oftentimes, in the vast majority of cases, before you see expansion, so that can be expansion in price to the upside, expansion in price to the downside, you will see contraction. It's the Minervini point, right? Volatility, contraction pattern. Volatility contracts invariably before volatility expands. Contraction, expansion. So you'll commonly see this tightness in price before breakout, and then pay attention to around what moving averages. Where do you see it? This one here. This is EPAC, 1988. What do we see? We see a really nice uptrend. Are these chart patterns, I know you've only seen about 3 of them, so are they looking familiar in some ways? Are you noticing common characteristics? Look at the rally pre-base. It's not chopping around. It rides its 10-day EMA. Look at the 52-week highs. Look at the spikes of volume. Look at the tightness on a relative basis of the price action. And then it puts in what I call a trigger bar. Oftentimes that is a tight low volume inside bar around one or more key moving averages. For these kind of setups, the most important two moving averages are going to be the 10-day EMA, the black line, and the 21-day EMA, the blue line. You can see it then happens over here as well. So you can see the ADR percentage, 2.44%. Now it's around about the same as the Dow Jones. Now why have I included this? Because aren't you, I thought you were just going to talk about high ADR percentage stocks. See this stock here, see the relative strength. Okay, look at what the Dow Jones is below its 200, it's below its 100. It's just like chopping around here. Maybe it's basing, but it's just chopping around. It's not going anywhere. It's in a long-term downtrend. It's below its 200. But yet this stock here with around the same ADR percentage, this is the relative strength point. So this is why you want to link multiple things, because even though the stock doesn't have the highest ADR percentage, it's showing impeccable, very strong relative strength versus an applicable major index being the Dow Jones. Next one here. Bit quicker stock here, LNN. 20-day ADR percentage here at this breakout. Tight low volume inside bar sitting on one moving average, 10-day EMA. Interesting. Are you starting to see common characteristics in terms of a flag, a Davis box type pattern here? 3.98% relative to the Dow Jones of 1.49%, 1.5%, 1988. Note the rally pre-base. It's not chopping around all over the place. It's staying above all the moving averages. Then as it starts to base, bounce off the 10, holds around the 10, inside bar. Where does it then start setting up? This one here, SHYF, 1991. So this stock here, note the rally pre-base, note what the basing pattern looks like. What are the common characteristics you see in terms of the bases? Is it resembling a flag, a Davis box, a pennant, a wedge, a cup and handle? What do you see? What do you see time and time and time again before these stocks then break out and go on huge runs? So you need to study things. There's 4 parts to every single trade. Identify, control, mitigate, optimize. It's really those 4 parts. Now there's a lot of subsections that go into it, but you really want to focus your studies on those. How do I identify a very high quality setup? Now there's a lot of things that go into that. How do I initially control the risk, create asymmetric reversible trades? How do I mitigate the risk? How do I then try and ride intermediate term trends? Really, really key. This one here, much quicker stock, 5.41% 20-day ADR as it's building here. And then what bar do you notice happened before the breakout? Tight low volume inside bar sitting on the 10-day EMA. Interesting. Next one here, 1993. So what do we see? BBY stock makes a good move up here, going from, this will be split adjusted but from around about $1 to $1.40ish, $1.30, something like that. Look at the volume coming through on a couple of these bars. 52-week high, pre-base good. Then look at the tightness, and then you get a tight bar sitting on the 10-day EMA. ADR, 20-day ADR, 3%. That of the Dow Jones is 0.61%. It's about 5 times quicker than the major index at this time here. Now, before the stock closes below its 21-day EMA, here it goes up 72%, and the Dow Jones didn't go anywhere. It's flat. AN, that was a dramatic pause, wasn't it? AN, so big move here. So sometimes what can kind of spark this big move is a catalyst. It could be they've just blown earnings out of the water, raised estimates, award of a government contract, FDA approval for a new revolutionary drug if it's a biotech or something like that, okay? So this here, something happens. There's a catalyst. Something happens here to spark this stock into life. It goes from, that's probably going to be about $3 up to $7 or so. It's a double hit, and then it starts basing. And then as you see this base, so before this stock then goes up around about 100% in 10 bars, 10 sessions, you want to know, how on earth did that stock go up 100% in 10 sessions? What did it do? And then go look at 100 other ones that go up 100% in 10 sessions. Do you see any commonalities? That is what you're studying, okay? It's not what some guy on CNBC or financial media, what are the stocks doing? How do they move? What do they do? How do they set up? What are the kind of nuances that you notice? You want to do this in such a deliberate manner. You want to go so deep in terms of your knowledge base, in terms of studying the action of stocks. Specifically, what do they do? How do they move? Then maybe, is there a reason for why they're moving? Potentially it's a catalyst like blowing earnings out the water or something like that. Then where is the stock finding support? 10-day, 21-day, tightness and price. Tight, pretty much, low volume inside bar sitting on the 10 and 21-day EMA. Now, I talk about here, I'm not going to go too much into it, but 4 parts of a trade, right? Identify, control, mitigate, optimize. For me, if a stock gets extended from the 10-day, I will go lower the bar, lower the bar, lower the bar with all or part of my position with a stop loss. So here, big supply shoot, prices trying to go up, sellers bringing it back down, potentially indicating a change of trend. Lower the bar, lower the bar, lower the bar. Okay, it's not always 1021 are going to be best. Okay, you want to have a toolkit for how you're thinking through these problems. This one here, AXDX in 1996. Stock here moving up. Now a bit of a bigger base, so you start getting the 50-day, it's holding above it, tightening, building the higher lows. And then here, the 20-day ADR percentage is 3.88% before the stock then goes up 265% in 12 sessions. And again, I'm not saying you're going to top ticket, but I'm just trying to illustrate the point that if you can focus on strong relative strength stocks that have high ADR percentages and are contracting like this, it's so key. Expansion, this is all expansion, will follow a period of contraction. That's my belief. This one here, eBay, back in 1998. So look at the move pre-base, look at the volume coming through, look at the 52-week highs. It tightens, pretty much low volume inside bar on what moving average? The 10-day EMA. Before eBay closes below, it's 21-day EMA. Now we're getting some of the juice coming through, okay? Before it closes below its 21-day EMA, it goes up 175%. 20-day ADR percentage was 9.25%. The S&P was 1.8% at that time. The S&P during that time goes up 9%, whereas the stock goes up 175%. I know where I want to be. This one here, Dish, this is in 1999. So this is more of a cup and handle type pattern. Okay, so here's the cup, here's the handle, but kind of some Davis box action going on in the handle. Note the 52-week highs as the stock is building out its handle quasi Davis box. And then here, it goes up 85% in 17 bars. Remember what I said, if it starts getting extended, lower the bar, lower the bar, lower the bar. The ADR, 4.5%, 20-day ADR of the SPYs at that time, about 1.5%. Okay, really important. Stay focused on the higher ADR percentage stocks. 1999 again. So the stock makes a big, look at the volume. See how it's sticking out? Something's happened here. Someone with a lot of cash is buying a lot. Do we know their reasons why? Maybe you can go and find a catalyst. Maybe it's earnings. They say it doesn't look to be earnings, but maybe there's an obvious catalyst, or maybe there's no apparent catalyst, but you see this change of character coming through. And then the stock starts basing. 10-day, 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 shake out demand tail. Tight. Look how the volume dries up. This is what accumulation, this is what absorption of supply looks like. Before it closes below its 21-day EMA, 156%. 20-day ADR percentage here, 6.3%. So what I like doing is I like looking for the stocks that have higher ADR percentages, and then I'm looking for optimal bases, flags, VCPs, when it's Davis, whatever it may be, right? But then I'm looking for certain candlesticks to occur around certain moving averages. Most commonly, that's going to be the 10-day and 21-day EMA, and then I'm looking for variations of what I call trigger bars, gap down reverse bars, shake out demand tails. And then when I'm planning the trade out, I'm trying to keep the initial risk relative to the 20-day ADR percentage of the stock favorable. I like it to be less than it, so it's a good metric to gauge initial risk off. Now, if the stock has a 20-day ADR percentage of 20%, I'm going to have a 20% initial stop loss. Anything over 5%, I've really got to justify and think like this is a ridiculously good setup. Qualcomm. Here, before the stock goes up 99% in 15 bars. And again, I'm not saying you're going to top ticket, but I'm trying to illustrate the point of relative strength and high 20-day ADR percentages. 6.16% relative to the SPYs at 1.25%. Okay, SPYs goes up about 4%. Qualcomm here goes up 19. Where do you want to be? Where do you want to be? Note what happens pre-base. Look at the rally. Look at the 52-week highs. Look at the volume. Look at the tightness in price. Look at the bounce off the 10, off the 10, off the 10, off the 10, off the 10. Look how the volume dries up. Low volume tight inside bar before you start getting the breakout. This one here, this is SAH. So see here, pre-earnings, someone knows something maybe? No, maybe not. We can't go ask them, it's 2001. But it moves up here, starts building a flag type pattern in here. Volume generally dries up, and then it's pretty much a tight low volume inside bar, albeit not quite the low volume, but a tight inside bar off the 10-day EMA, 20-day ADR, 3.79% versus the SPY's 1.82%. In that time, before the stock closes below its 21-day EMA, goes up 66%. The SPY's down 5%. Focus on leadership. When this stock here is setting up, the SPYs is still below its 200-day moving average. NHTC. So if you look at this stock here, it has a 20-day ADR percentage of 5.44%. Note the tightness in price that you're seeing in generally the low volume before the stock expands to the upside. Look at the bouts of volume coming through in here. This is a pretty good setup in here. Look at the bouts of volume coming through on this rally. Look at the 52-week high. Are there common things that you're noticing here? This one here, this is CLF. So look at the index. It's just not really going anywhere. Like it's kind of sideways to down in this period. Well, what's CLF done? Okay, powered up here, pull back in, gap down reverse bar off the 10, and then tight into the 10. The volume dries up. Tightness in price, low relative volume in the stock showing relative strength around key moving averages indicates a little supply coming to the market. Stock then goes up 43% before it closes below its 21, whereas the S&P goes up 7.5% in that time period. I where I want to be. Travel Zoo, nice high ADR. Here we go, nice high ADR. 20-day ADR percentage, 8.79%. Before it closes, very convincingly, clear change of character here, okay? Clear change of character. A lot of supply. Opens on the high, goes out on the low, volume pops, change character. Run for the exits. 8.79%. When this stock here, look at the tightness and price. Holds the 50, little bounce off the 50 here, gap down, reverse bar off the 50, tight. Volume dries up. Tightness and price, low relative volume, very much supply coming to the market. Stock's been showing relative strength. Look at the 52-week highs. And then it breaks out through the high of this little low pivot on the earnings. And the S&P 500 is on its lows. So the S&P 500 literally puts in its low here as the stock starts breaking out. Focus on the leadership stocks. This stock here goes up 113%, while during the same time period, the S&P goes up about 2.75%. BLDP. So this is 2006. So okay reaction, pretty good reaction coming through to the earnings. Holds the 21, starts basing, tightness and price, low volume, and then this stock here powers out. Look at the ADR, 3.82% relative to the SPY 0.78%. Celsius 2009. So the index basically just going sideways, not really going anywhere, whereas Celsius builds a base in here. Really nice base. This is a ridiculously good setup in here. Really good. Builds another base. See how it holds the 21, breaks out here, powers high, goes up 257% in 15 bars. I'm not saying you're going to top ticket, but you need to understand in a very deliberate manner, what does a stock do before it goes up 250% in 15 sessions? What does it do? Study 100 of them and you'll probably identify similar characteristics. Good, you want to build setups around that. 20-day ADR percentage, 7%. SPYs, 1.79%. Big difference. CVGI, that's my dyslexia paying up there. So look how the stock moves up here, stays above all the key moving averages, pulls in, bounce off the 21, tight. Look how the volume dries up. 20-day ADR percentage, 8.71% versus the SPYs on the same day of 1.46%. Quicker stocks, it's really good. BZH, Beazer Homes. Look at the uptrend, see how it's staying above the moving averages, pulls in, flag, Darvis box type pattern, bounce off the 21, tight. Stock goes up 54% in 5 bars. I'm not saying you're going to top ticket, but I'm trying to illustrate the importance of looking for high ADR percentage stocks displaying a lot of relative strength, constructive basing type patterns, periods of contraction, because then expansion invariably follows. Next one here, MVMI. So this one here, stock in a nice uptrend. Now a bit of a bigger base, bounce off the 50, off the 50, tight low volume, inside bar, 20-day ADR percentage is 8.38%. So why I quite like these tight low volume inside bars and these optimal bases sitting around one or more key moving averages is I can try and create a very asymmetric reverse reward trade. So on a stock like this that's got an ADR percentage of like 8%, well, if it puts in this tight low volume inside bar, maybe my initial stop loss could be 2%, 3%. Something like that, maybe up to like 4%. So therefore I'm initial stop loss half the 20-day ADR percentage of the stock can look very appealing, really appealing. So this stock here, before it closes below its 10-day EMA, convincingly up here, 93%. Market, S&P, 4%. Market's gone nowhere. CPE, 20-day ADR percentage, 6.78%. Look at the tightness. What moving average are you seeing the tightness on before this stock starts breaking out? Okay, so you want to think about things from, okay, where is the best place to be entering? When you've gone and studied 100,000 of these kind of stocks and setups, you then want to go, right, okay, I now understand what these stocks are doing. I understand it's a chart pattern or chart patterns that resemble these. You decide what they are. For me, it's kind of flags, pennants, wedges, VCP, right? Those kind of things. And then you want to go, okay, now I know that. What moving averages do I want to use as a reference point? They're not magical, it's just a reference point, the deliberate practice of things where you go, okay, it's a reference point. Around here, when I start to see this basing pattern, high ADR percentage stock, good volume coming through, nice rally, volumes then drying up, RS line looks solid. What am I expecting to see around certain moving averages? I'm expecting it to hold around the 10, hold around the 20, hold around the 50. Show that institutions, large operators are supporting the stock where I'd like to see them supporting the stock. And then before it breaks out, well, what am I looking for? How do I then create an asymmetric reversible trade around that? How do I try and risk $1 to make a proverbial $5, $10, $15, $20, $25? So 10 times my initial risk, 15 times, 20 times my initial risk. That's then the point of like these trigger bars, right? Where they get really tight relative to the ADR percentage. Now sometimes as well, you get gap down reverse bars and shakeout demand tails that can provide favorable reversible trades. Sometimes you don't always get these really tight bars. Sometimes you got to look for alternative alternative entries, but I'm showing you here a lot. There'll be a couple later on, gap down reverse bars, a couple shake out demand tails, but I'm really dialing it in, trying to show you trigger bars, really tight, low volume inside bars sitting on one or more key moving averages. So this stock here, nice move here. Look at the volume. This is key, okay? Look for spikes in volume with positive price appreciation. Could be on the earnings. Okay, it may be on the earnings, maybe it's a catalyst, maybe something happens, but this and then a constructive base. This is saying lots and lots of people are interested. Then it's that Bayesian mentality. You update your decision-making process as new information becomes available every single day. All I am ever trying to do, plan and prepare as best I can for the next session, then just execute my trading plan during the session. Rinse, repeat till the next session. Just do that. Stay very, very focused. So here, 20-day ADR percentage of 8.16%. Now, because of the tightness of the stock, it may mean that my initial stop loss, targeting it, I invariably use a buy stop limit order with the stop loss attached. So targeting it through the high stop underneath the low. Maybe the initial stop loss here is 4%, half the 20-day ADR percentage. And the stop before it closes below its 10-day EMA, 157%. SPYs in that time, 20-day ADR was 0.88%, and it goes nowhere. It goes up 0.69%. Haha, funny number. BIOL, this one here. Look at what's happening pre-base. Something has happened here. Go find out what it is. Something has happened here for the stock to be up whatever it is up during this time period. And then you're looking for constructive bases. Stock to find supportive action in certain areas. Pulls back down to the 21. This is a gap down reversal bar. Gap down, open on the low, push up, subtle sign of strength. And then here, looks to be just about a low volume inside bar. 20-day ADR, 7.25%. SPYs, not even 1%. Where do you want to be? Do a couple more. CLS, so this one here is a high tight flag, so you can see the stock goes up 111%, pulls back down. What moving averages are you looking for as a reference point to see supportive action? Why on those moving averages? Because you've seen it 1,001 times before. 21-day gap down reversal bar, tightness holds around. You actually get a nice trigger bar in here as it puts in a high low, tight little low volume inside trigger bar. Not quite an inside bar, but this one over here, tight low volume inside bar, contraction, and then what follows contraction is expansion. Before it closes below, its 10-day goes up 56% in 16 bars. ADR, 7.25%. SPYs, 0.7%. IMGN, this one here, this probably is a biotech stock, so it may be like FDA approval for a drug or something like that. But then what does the stock do? It bases, builds this flag type pattern, low volume inside bar, 10-day EMA. Said that a few times, haven't I? And look at the indexes. The index looks terrible. So while the index is down here, just lower low, lower high, lower low, looks terrible, the stock's just holding up here, just building a base. This is relative strength. Didn't just happen on US stocks, you can see this on all stocks across all markets. So here is a UK stock, Pantheon Resources, okay? So it moves up here, look at the volume, look at the 52-week highs, and then we've got the UKX being the FTSE 100 below here. So as it puts in this low volume inside bar on the 21-day EMA, look at the index, okay? Still below its 200, still below its 1, it's in a longer term downtrend, right? Whereas leading stocks will lead. Leading stocks will lead. Low volume tight inside bar. There's then another really good entry bar right here as well. Before this then closes below its 21-day EMA, goes up 339%. For me, in terms of optimizing profits, I like to use the 10-day EMA, 21-day EMA as trailing stops for part of the position. But if I think a stock starts getting extended from the 10-day, as I was explaining to you earlier, I will move my stop loss on all or part of the position. It depends to lower the day, 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 and choke it off like that if I want to do that. This one here, Pacific Biosciences of California. So look at the volume coming through in the positive price appreciation. Pulls in 21, 21, 21. Tightens on the 21. And then you see the move. 20-day ADR percentage, 7.25% versus the SPYs, 0.88%. So you really want these higher ADR stocks that are acting like this and then basing constructively and then doing certain things in terms of setting up contraction in price is really key. I like to look for trigger bars or shake out demand tails, gap down reversal bars for entries around one or more key moving averages. This is AG. So here you actually have all three candlesticks that I look for. This one right here, gap down reverse bar. Prior close here, gaps down, opens here. 2 bars later, shake out demand tail. Next bar here, tight low volume inside bar. Trigger bar action on the 10-day EMA. Volume dries up. Look at the 52-week highs. 20-day ADR percentage, 6.99%. 20-day ADR percentage of the SPY is 0.89%. So you really want to understand the character of the stock as well. So something that's really good to see is when you load up a chart of the stock, not only does it have everything we've been talking about, but you load it up and you go look at previous breakouts, because that'll give you a feel for, okay, if this stock's going to break out and run, how far may it go? Okay, the best indication I think of how a stock's going to act in the future. How did it act in the past? So I love to load up a chart and I see this. Okay, wow, nice uptrend, bases, goes. Nice uptrend, bases, goes. Nice uptrend, bases, goes. That for me is really good because I think the previous behavior of the stock will give me the best indication, not what someone says on CNBC or someone says on social media. The stock's own action will give me the best indication of how it may act in the future. Really, really key. CGC, Canopy Growth Corp. So sometimes you can have a stock where over here it would have had a really high ADR percentage, but you can see that the index had been pretty terrible, right? The index not really going anywhere, so it's just putting a bit of weight on a stock. So sometimes you can get a stock that's displaying a lot of relative strength, but because the base increases, the 20-day ADR percentage can come down. Now it's still over twice that of the S&P 500, 0.92 versus 2.23, but sometimes you can get these much longer bases where the volatility starts to dry up because of the base duration. So it's just something you want to be aware of. This stock here, if we get this kind of clear change character, and at the end of the day, that 174%, like where do you want it? And the index hasn't gone anywhere. So it's just something to be aware about. You can have a really high ADR stock, but then because of the base duration and that kind of volatility decreasing, it can then seem like it's a lower ADR percentage stock. But this is where you want to pull up the previous behavior of the stock and go, how may this stock may move? What is potentially reasonable? Cala Biosciences, 20-day ADR, 7.87%, 2017, lots of good trades then. In that year, look at the volume coming through. Could have been an FDA approval because it's a biotech. And then look at the tightness and price. Tightness and price, low volume, absorption of supplies. Not much supply that is coming through. 7.87% versus an S&P 500 20-day ADR percentage of 0.5%. It is many, many multiples of the S&P 500. It's really, really good to see. ACB, another cannabis stock like CGC a couple of charts ago. So powerful move up here. See how it stays above the moving averages. Gap down reversal bar around the 10, shake out to Martel off the 21, pulls in, higher low, tight. Look how the volume dries up, 20-day ADR percentage of 8.31%. So this is the point then of like looking for these, what I call trigger bars, tight low volume inside bars invariably. Why? Because the initial risk versus the 20-day ADR percentage can be very, very favorable. Now, I'm not saying you're going to top tick this and sell it at 113.92%. I'm not saying that, but I'm showing you the power. In 7 sessions, the stock goes up over 100%, while the index has gone up 1%. Where do you want to be? AMD, name you're probably familiar with, 2018, 20-day ADR percentage, nice, 4.77%. So this can be a real sweet spot when you get these more like TML type stocks. So these kind of classic O'Neill stocks that have big earnings coming through, so triple-digit earnings, triple-digit sales, really good estimates, loads of liquidity for institutions, involved in a new area of the market as well, or kind of like a growthy type area, so semiconductors, AI, all of that stuff, right? But this here builds a really nice flag type pattern, support on the 10, on the 10, on the 10, then the 21. This is a gap down reversal bar type candlestick. Then this is a pretty good bar that follows also 52-week highs in the base. The stock's very strong, but the 20-day ADR percentage is 4.77% relative to the S&P 500 at this time, 0.68%. AMD is, if the index is going to go up 10%, AMD could go up many multiples of that because of the ADR point here. So you can sometimes find a real sweet spot. You get like a TML type stock, so more of the O'Neill type stock, but it has a nice ADR percentage like 3, 4, 5, 6%. That there can look very, very interesting indeed. Tesla. So similar point that I made on CGC, that sometimes because the base duration increases to an extent, the volatility starts to contract, so the ADR percentage starts to come down relative to what it would have been previously as well. But you also want to understand the character of the stock. Tesla, when it breaks out and wants to run, it can run and run hard, right? 20-day ADR percentage of the SPYs, 0.55%. Tesla, 2.25%. Tesla is nearly 5 times quicker than the market. So if the market goes up 10%, it's reasonable to expect Tesla could go up 40-50%. But again, it tends to be much more kind of exponential in nature instead of linear in nature. Tesla for a closest blow, it's 10-day EMA, 136%. Don't mess up the big ones. This one here, this is CODX. We looked at this one a little bit earlier on. So this one here goes up over 500% in the space of 4 sessions. 20-day ADR percentage, 22.19. This is ridiculous. Low volume tight inside bar on the 10-day EMA. And look what the market did. This is going into COVID crack. Look what the market did. Look what this stock did. Lower the bar, lower the bar, lower the bar is an affected day. Okay, stock goes up 300%. Bases, 10-day, 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 21-day. Tight low volume inside bar. Look how the volume dries up. Look at the 52-week highs in the base. These ones here, this is extremely high ADR. When you start getting like above 10, you're getting very high. When you start getting like 15, 20, it is very, very high on a relative basis versus the major indexes. Novavax, we looked at this one earlier. I think the quote was, this is a 6-star setup on a 5-star scale. So the stock makes a powerful move here. Look at the volume, look at the 52-week highs, pulls in, bounce off the 10, bounce off the 21, 21, 21, 21, low volume inside bar. See that? Sitting on the 1021, and then before it closes below its 21, 226%. Not bad, right? Look at the strength it was showing versus the S&P 500. Look at the 2 sessions. Certainly the bar before. Look at the session the S&P 500 had, and look at the stock, how it just held up, held its 21. Look, gap down reversal bar. Extreme strength. GME. Wouldn't be a video about high ADR without GME, right? So Jan 2021, before it breaks out of this like textbook kind of like BCP, couple handle type base, really tight, low volume bar sitting on the 10-day, the 20-day ADR percentage is 9.48%. The S&P 500 is around about 1%. This stock goes up 1,600%. So what we could add here as well is if you have a high ADR percentage stock displaying fantastic relative strength versus the market, great trend, optimal basing type pattern, and it has a really high short interest, GME, then we can really be talking and potentially get a really powerful short squeeze. So that could be a little cherry on top as well. The stock has a very high short interest, 25%, 30%, 35%, 40%, something like that. I would consider very high. Anything over 30%, I'd consider very high indeed. So again, just little things to be noticing, okay? And as I said, lower the bar, lower the bar, lower the bar if you think it starts getting extended. That's what I do. LEDS, so this one here, May 2021, stock powers up here. Look at the volume coming through. Someone knows something, someone doing something here. Pulls down, bounce off the 21, higher low, low volume, inside bar. 20-day ADR percentage is massive. Cannot stress this enough. 31%. It's huge. So this is why a stock with a ADR percentage of 31% can go up 281% in 9 sessions. In 9 sessions, and then you get supply shoot, supply shoot, supply shoot. You don't want to wait till close below the 21 day here. Lower the bar, lower the bar, lower the bar, all part of the stop loss. That's what I would do. S&P in that region there goes up less than 1%. Okay, this is the power of focusing on these higher ADR percentage stocks. Got 3 more slides for you. Okay, this is September 2022. So biotech related stock, again, biotechs when they have these gap ups, usually FDA approval or something like that. Okay, so gap up, huge volume coming through, flag type pattern, pulls into the 10-day EMA. The volume dries up. From memory, this is an inside bar as well. I can't quite see it because of the vertical line, but I think it's an inside bar. And then look at the 20-day ADR percentage of the stock, 9.49% relative to the S&P, which is in the context of a downtrend here, 1.83%. So see how the S&P is trending down, the stock is doing the opposite. S&P trending down, stock doing the opposite. Focus on the leaders. Kappa, this one here, 2022 into 2023. Stock makes a big move here. There's a shed ton of insider buying going on by CEO, CFO, I think the president of the company, multiple directors as well during this time period. Pulls in, bounce off the 10-day EMA, pull in again, bounce off the 10-day higher low, 20-day ADR percentage, 18.63%. S&P at that time there, a little bit more volatile. You can see the S&P's action around about 2%. Now before it closes below its 21-day EMA, it goes up 427%. S&P during that same time goes up 3%. Focus on the leaders. Focus on stocks that have really high ADRs. Certainly if they've done action like this, like get it dialed in. Really, like focus your kind of screening and your routines around, okay, how do I try and identify what are the strongest stocks in the market, and ideally they are displaying some of the characteristics I'm talking to you about in this video. So this one here, this is the final slide. I hope you've enjoyed it, but I do just want to finish with this here, talking about fundamentals. I want to read a couple of Qullamaggie quotes out to you as well. So momentum, relative strength, plus fundamentals. So we've been talking a lot about kind of momentum, basing type patterns, relative strength, high ADR. We want to bring the fundamentals in as well a little bit, okay? So the best ones being the setups are those that show relative strength, that can't go lower even if the market overall or the indexes are showing weakness and going lower. And these things, stocks can't go lower, or they may even be building higher lows. I like to trade the stocks with the biggest earnings. They tend to make the biggest moves. In my stock screener, that custom built stock screener, you can see the earnings and sales data as well. You just click on the flex charts tab. But the only thing you really need to focus on is the momentum, because all of the big earnings winners are going to have momentum. You're going to catch them if you just focus on momentum. If you're going to get big moves in the stock, there needs to be a reason for it to go up. Every stock can go up a short amount of time on some random stuff, but there needs to be something. Usually earnings or expected earnings is the big driver for long-term moves. So this here is Monster Beverage. It's nearly as perfect a base you will see on the monthly chart in the context of a bear market. 52-week highs. There's another quote here. If you're not paying attention to relative strength, well, I guess you don't know what you're doing. I'd agree with that. See the 52-week highs in the base. What did I tell you earlier? 52-week highs in the base is an extreme sign of strength. So you have a stock here that's building a constructive base, multiple shakeout demand tails, tightening around the monthly 10 EMA, tight low volume inside bar on the monthly chart before the expansion. Really key. Now what happened here with Monster Beverage is you can see the EPS growth, so the earnings to sales and the net profit margins growth. 2023 earnings on a yearly basis were up 75%, sales were up 20%, net profit margins accelerated from 3.3 to 5.4%. 2004 yearly EPS, so earnings, went up 214%, sales went up 63%, net profit margins doubled from 5.4% to 11.3%, over doubled. 2005 EPS grew 195%, sales grew 93%, and net profit margins again accelerated from 11.3% to 18%. This stock here went up 8,942% in 35 months. Is every stock going to do that? No, but this is the thing about finding really rare special occasions. Stocks displaying outstanding relative strength have this type of growth in terms of their earnings, their sales, their net profit margins. The relative strength is there, the base is there, the high ADR percentage is there, and then piecing it all together. Like, these are the like holy grail type situations to try and find. So I'll wrap that video up there, guys. I hope you guys have really enjoyed that. Learn a little bit about the importance of focusing on higher ADR percentage stocks, high relative strength stocks, thinking a little bit about the fundamentals, the common chart patterns that you see, the common characteristics that you tend to see pre-base, in the base, post-base as well. So thinking about trades from 4 main areas. Number 1, how do you identify a high quality setup? Number 2, how do you initially control the risk, create asymmetric risk versus reward trading opportunities? Number 3, how do you mitigate the risk? How do you free roll the trades? And then number 4 is how do you optimize the profits? If the stock is going to make a big move from point A to point B, how can you try and be there? What are repeatable selling rules and selling guidelines that you can use to help optimize profits? So I really hope you've enjoyed that video. Thank you very much for watching, and I look forward to seeing you in a future video.